My name is Eric Chan. I'm the Managing Director of Aura Group. I was also one of the co-founders. I lead the venture capital strategy within the business.
My name is Mark Estes and I'm a partner at Aura Ventures.
My name is Sabrina. I'm the Corporate Development Manager at Aura Ventures, which is the venture capital arm of Aura Group.
Aura is a business we invest from the very early inception of a business all the way through to well-established businesses cross market, cross geographies, and with different thematic behind that investment strategy.
Aura Group is a $1.4 billion alternative asset management platform, investing across venture capital, private equity, and alternative credit.
Aura has been in market, one of the longest standing VCs in Australia.
We are on a mission to empower the next 25 to 30 founders solving the world's problems one solution at a time.
I think that venture capital is the beginning of all of the greatest stories we've ever seen in terms of companies and technology and the biggest shifts that we've seen as a society.
What's really interesting and what's exciting about investing in venture capital today is we're in this weird convergence of a market reset that happened a few years ago, aligned with a technological platform shift with AI. We sat on the sideline for the first 18 months to really understand where the AI value was going to get captured. For most part of the first 18 months from that point was just a lot of, AI wrappers wrapped around LLM models, but just didn't really solve real problems. And it wasn't only around the last couple of years that we're starting to see real use cases being addressed.
A lot of our role as investors is really identifying where the opportunities are, and it's not always necessarily in the product or in the technology. We're looking for the people who have a really clear, vision and understanding of those industries, and we recognize that they have the potential capability, the coachability as well, to actually achieve what they're looking to set out to achieve.
Not only is it powering the next innovation curve for what the next 10, 15, 20 years looks like, but it's also very much a psychology game. And what I mean by that is that you're working with individuals that have a true conviction with how they're thinking about a problem, and they need someone to come on a journey with them.
It's not really about the technology, it's not about AI in itself. It is the problem and the solving of how you're going to solve that problem that's going to create real value to the customer rather than AI in itself. What is the problem that they're solving? Does the founders have real deep, unique insights into that problem? Do they have strong domain expertise? And are they solving the problem in a way where it could never have been solved before until AI came along, or solving in a way that's 10 times better than what it was historically?
The best businesses that have succeeded globally, regardless of venture, is ones that follow a consistent methodology to the way that they obsessively solve a problem. And the ones that obsessively solve a problem day in, day out are the ones that materially achieve great results.
What's really interesting today is that there's obviously an increase of opportunity that's coming out of as a result of AI, where the barriers to actually launching a startup is actually much lower, but there's also a lot of use cases that haven't been solved. So in a way, an analogy is we kind of look at AI very much like where we were in the SaaS cycle 10 plus years ago. I think adoption is still relatively flat, although there's a lot of curiosity and interest. Adoption is still relatively flat, which means that valuation hasn't really been re-rated, especially in that B2B space. And as adoption increases and people start believing in the models and taking more and adopting the technology within their businesses more and more, you start seeing the valuations re-rate, and that's the opportunity that we're seeing. We're kind of at the beginning of that cycle, and we're trying to capture these businesses at the beginning of the cycle. And because we're early in the cycle of AI, and because we've had this reset, valuations is very attractive and very reasonable, which has allowed us to get into businesses with a strategy of owning material ownerships in these businesses at reasonable valuations. There's always been this valuation arbitrage between Australia and the US. To give you an example, in seed stage, on average, you see about a 40% difference in valuation for exactly the same business. But what that means is you're investing in Australian valuations with a global opportunity. So the moment that you help these companies expand into new markets and raise capital offshore, you potentially can capture that arbitrage.
And a venture capitalist or an investor in an early stage business has almost the utmost importance because it gives them that sort of immediate jet fuel to continue to explore their solution and their thesis.
So once we kind of bring them into the fold, our role then is to really bring out the best in them. And whatever that looks like, building the best team around them, setting them up with the right people or the right networks, equipping them with world-class technology and platforms, and making sure they're surrounded in the best possible environment to thrive. That is our role. And the beauty of that is every single founder you come across, there's definitely a through line of founder DNA that we see, but at the same time, they come from such unexpected backgrounds, and we really have to appreciate the uniqueness of every single founder who sits in front of us and what motivates them and what drives them, and actually making sure that they have everything they need to be extremely successful in building the business that they're building.
Part of the strategy is also to help our portfolio companies grow beyond Australia. And the US has become a market that's very attractive for our founders, not only because of its size, but also because the increasing access to capital over there. A lot of our value add comes from us partnering with offshore VCs to help our portfolio companies raise the next round or the round after that. These opportunities are not accessible anywhere else except within private markets, especially in venture capital. You're not going to see these in private equity portfolios. You're not going to see this on the listed market.
Venture capital really stands the test of time. It's not as susceptible to the flux that we see that affects almost every other aspect of the market. Its performance is not mirrored by what is currently happening in the market. It outplays all of that because it is so long term, because it's about that real growth.
Part of the reason why we wanted to go with venture crowd and give access to, I guess, investors that wanted to write smaller amounts into this asset class is because we truly believe it is a way to grow the market and to grow the industry as a whole. If these investors never get the opportunity to actually make their first investment in a way that they feel comfortable, then they're never going to write the large checks later on.
You know, the values that Aura is founded on is that anyone should be able to, you know, build generational wealth for their families, for their future generations, and what Venture Crowd does aligns really, really well with that.
Oh my god, it's so tall.
Is there this table is tilted or your camera's tilted? Just saying.
It was perfect.
That was. Do you want me to rehash all of that again?
No.
That's his baby, but thank you so much.